not okay. Basically, last week we looked at just like Monday said, we were generally looking at we were concentrating on the USDT market. Yeah, we were specifically dealing with the USDT market, and we said so much about the USDT market, and so okay, so we come home. Now we were looking at the USDT market specifically, and we dived into how we pick up signal and how we set it up. And I emphasize so much the aspect of wallet management. Ladies and gentlemen, however much exciting the market may look, however much exciting the market may seem, the market can crush you. The market can go against you, and it will hit you 1-0, and you'll have nothing to do but rather just fold your hand and look on how it is, going in the deep. So it is very important for us to exercise proper wallet management. It is better every single day you make, even if only $1 or $2, other than having the greed and wanting to enter so that you win big, and at the end of it all you go into floating loss, and then stay for months without seeing any profit, staying for weeks without seeing any profit. So it is rather collect the 1 cent, the $1, the $2 per day. Imagine every day $2. It never goes back. You can never just get it on the way. It's something. Okay, it is something. So you rather collect the $2 in 10 days, that's $20. In a month, that's roughly about $60. Where do you get that? Like something which is like a side hustle, something which is like, if you're not doing it full time, something that is just, your money is making money for you. At the end of the month, you can pay a little bills, some bills. So it is very important you execute proper wallet management and get little but consistently or every day. Okay, so I emphasize the aspect of wallet management so much, and I would really want to do it today just a little bit before we can look at the other thing. I emphasize, just for purposes of those who missed it, that if you have a specific amount of USDT or you have a specific amount of capital, the first thing you need to do, one, you are supposed to, first of all, trade one signal at a time. Ladies and gentlemen, pick up a signal at a time. Avoid, I repeat, stop trading all the signals. If you find yourself that you've entered already a particular signal and immediately I drop another, if you find yourself already in a specific signal, please let that signal deliver first. Let that coin deliver before you can take up another coin or another signal. I will always share as many signals as possible. All right. So take up that which you will see within 5 minutes. If 5 minutes, a signal that you will see within 5 minutes, that's the signal you trade. If you come across the signal and you see it has gone past 5 minutes, relax, let it go. All right. And wait. Just wait. Keep your eyes in the group, in the signal group, and wait for what next signal, for the next signal that is going to come. And then you set it up. Today, I'm going to give you settings, an automated settings where you will not have to do all the settings that, you don't have to, whenever you see a signal, you're supposed to now go and look for that coin, begin settings, those parameters. I'm going to give you a setting, 2 settings that you just choose any of the 2, depending on what the TP is saying in the signal. All right, that's what I'm going to do specifically today. Okay, so the first thing is trade a signal at a time. Ladies and gentlemen, don't be excited. Don't think you have 10,000, because if you go by my wallet management strategy, even if you have 10K, your first buying amount, which is the 15% of the half of the 50, is going to be still sufficient. It will be something, right? Not until maybe you find yourself very confident. Like some people are risk taker. Like personally, I do, because at least I've a little bit learned the market. Though sometimes it also hits me, but I'm a hardcore, With my own experience, at least I have a little bit. I can take certain, I can enter with specific amount, But for you, for purposes of a smooth journey in trading, take heed to the wallet management strategy. So 1, trade 1 signal at a time. Trade 1 coin at a time. At most, I mean, at least, okay, at most two. You can trade two. If you really now want to trade, depending on the amount of capital you have, you can trade up to maybe two. You get that? Two signals. Why? Because you're taking heed, you're taking caution about the wallet management strategy. So trade a signal at a time. Two, I just want to give you an example. See mine. Am I trading many coins? I'm not trading. I'm just giving you an example, for example. I'm just giving you an example. You get that? I don't trade many coins, you know. So you also do the same. Just trade once a signal delivers. Hey, you can then go for the next. All right.
Competition.
Yes. So that's the first thing you need to do. Then two, the second thing that you need to take very seriously is wallet management. Ensure proper wallet management. And how do we manage our wallet? Number one, I said, irrespective of whatever capital you have, divide that capital into half, into two. If you have, for example, like $1,000 as the available trading capital, divide it by two, you will have $500. So $500. The half of the 1,000, which is $500, keep it as a reserve. Keep it as a reserve bullet, a reserve capital. Keep it in your reserve pool. What would be the essence of that? It will help you at a point when the market has extremely dipped, but it has presented one of the best opportunity of which would permit you to buy, right? It will help you at a point when the market price has dipped significantly and it is on the verge of having a U-turn or having what we call an uptrend. It is at the maximum of a downtrend. This is when now you bring in the reserve bullet, because this is a point where you now have to kill the enemy to the dot. You get that? So you bring in the reserve capital, do either automatic or manual replenishment, meaning you're pumping in $500, acquiring more coins cheaply because the price would have dropped so significantly. And then the effect of buying this deep or buying at that point, you're going to see that there will be a significant reduction on the floating loss as well. You get that? It will reduce the floating loss so much. You get that? So meaning, if, for example, you have divided your capital into $500, this is your reserve, okay? And then the robot has utilized all the 500 which you wanted to expose in the market. And then the market price has dipped still, and you see yourself floating at a loss of, let's say, negative 10%, right? Do you know what the effect of this $500 is going to do on this floating loss? This $500, once you replenish with a coin whose market price has dipped by negative 10%, is going to half this percentage. It is going to reduce the negative 10 into only negative 5%. Now, do you know the implication of reducing the floating loss to negative 5%? Imagine you were to wait for the market price to rise all the way by 10% before you find yourself out of negative, before you can begin seeing yourself floating in profit. This time, you don't have to wait for all that long for the market price to pump by 10% before you can go into floating profit. You only need a rise of only 5%, and boom, you'll find yourself already off the negative zone and you will be floating in profit. You get that? So you only need a positive rise of 5. And once you hit the 5%, your price will go now above the average price and you find yourself floating in profit. So meaning, imagine if this was 10% from here to here. Yeah, this is 10% from here to here. So for you to begin, this assume that the market price had dropped by negative 10%. You're floating at negative 10%. And then you bought here, replenishing this market with $500 because there was already $500 that was used in the course of the trading. If you pump the $500, if you replenish this market, the market of this coin, well, you replenish the coin, what is going to happen? This 500 will cause an effect which will reduce the floating loss to -5. Now imagine -5 will be just halfway of the 10%. Now, instead of waiting for the market price to rise all the way from here to this point before you can begin floating in profit, you only need a rise of 5%. And from here, you're going to begin seeing yourself floating in profit already. So you have 10%, 5% extra. See, this would have been, let's say this was the average price for the last buy. And because of that, the price had dipped from the average price. The current price of the coin had dipped away from the average price by -10. This time, by you buying, you're going to reduce the gap between the current price and the average price. We are going to assume that the average price is going to be around here, midway. That's roughly by about 5%. So it means that you only need a rise of 5% before you can see your market price going above the average, the new average price. So from after the new average price created as a result of this replenishment, you're going to see that you're going to have from all this point all the way to the first average price, you'll just be seeing yourself in plus floating profit. Imagine. So assume someone who was waiting for another extra rise, let's say of 5%. So for this person will have from here to there 10%. But someone who was waiting for the market price to rise from this negative, by 10 to get off the negative to come here will only have 5%. But this person will begin enjoying profit right away from even below, because the effect of replenishment caused a reduction in the floating loss. It reduced the gap between the new average price created and the current market price of that coin. So it is very important to take that so much into account. I hope that is very clear. All right. Now, then after that was with regards to it was in regards to how you utilize or when you utilize the reserve. Now, that one I've just shown you when you want to do, let's say, when you want to pump in the 500 at a go. That means you should have looked at the market price of that coin, or you should have looked at the market structure. And if you are certain that, yes, the market price has come, or it is at the end, or it has come to an end of its downtrend, that is the time to jump in. You cannot just keep on shooting before ascertaining whether your enemy's bullets are done. You need to keep some reserve so that at the point you now feel, okay, you only now hear only bam, the bullets are only sounding once instead of rapid. You now can begin saying, okay, I think the bullets are getting done. So they're also using it wisely and economical. So that is the time you also come in, and begin your rapid shooting. So that's just in simple terms for purpose of explanation. So the reserve is used for replenishment, and the effect and the importance of replenishment is, one, you're acquiring more coins for less, or for little price, but at the same time you're also having an effect. You're causing an effect in the floating loss. You're trying to reduce a floating loss, right? You're trying to make the robot establish a new average price, which will be closer to the price of that coin at that time, to make sure that you get out of the market faster and earlier. Now, after dividing the 1,000 into 2, and you already know what the reserve is going to do, you're now going to expose the 500 in the market. The 500, you're not going to just expose them at once. You're not just going to enter with it at once, or you will not allow the robot to just enter with it at once. You're going to get 15% of this, 15% of your 500, which you intend to expose in the market, so that the robot can utilize it economically, bit by bit, not just at once. You get that? So you're going to get 15% of your $500, right? That amount you're going to get is what you're going to set as, you're going to use as your first buy-in amount, is what you're going to set as the first buy-in amount. 15% of the 500, which you intend to allow the robot to expose in the market. You're going to get 15% of it, and that will be your first buying amount, right? Then after getting your first buying amount, in the signal, I normally drop signals with margin call drops. With only 2 margin call limits. Let me give an example, cite an example here. Where? Okay. Let's, like for example, this, you know, see this other coin CTSI. You see this signal. In the signal, I give the following parameters. I give the name of the coin or the trading pair. So this is the name of the coin which you're going to trade with your USDT. So that's the pair, CTSI stroke USDT. I always give you the entry price or the price at which you should enter the market. Now, contrary to other groups and leaders, me, I give current price signals. I don't give preset. I believe you should know that and you should get used to it. That is if you want to go my way or if you want to be, you know, go the way we do things, because most of the things I'll be recording is with reference to current price signals. Okay. I do not that I don't preset, but I enjoy more the current price. Yeah. So I always give you the entry price and I ask you to enter at current price. Just enter at current price. And then I give you the take profit. Now the take profit here is not there in the robot. It is not written as take profit. Take profit here is what you will find in your robot written as wall position take profit ratio. Okay, that take profit. Let me come back and show it here. Let me show it to you here. Okay, so let me pick this. So on the coin, find the parameters written as wall position take profit ratio. So you, when you check on your trade settings here, you will see what I'm talking about. So in the trade settings, what I've written in the signal as take profit is actually wall position take profit ratio. Okay, wall position take profit ratio. That is what is there in the signal as take profits. Okay, then margin call limit. This is then, as we discussed the other time, that the margin call limit refers to how many times you would wish the robot to buy for as long as the market price is dipping. So long as the market price dips below the first entry price. Okay, because there's an initial entry. When you start your robot, the robot enters in the market or picks up a specific amount and buys with that coin. Now, the margin call limit now takes effect after the robot has already bought and the price fails to rise to the intended take profit you've set, but instead it continues to dip. How many times would you wish the robot to buy or to continue buying? That is what we call margin call limit. So in the signal, normally I give you two, that let the robot buy 2 times. Okay, that is for as long as the price dips, let it buy 2 times. All right. Yeah, so that is that. So that's what is in the signal. And then margin call drops. Now, if you instruct your robot to buy 2 times, how often should it buy? Or when should it really buy? When the market price has dropped by what percentage? That is the question. Yes, you told it to buy 2 times, but when should it buy? Now, when it should buy is what you go and set, is what we call the margin call drops. Yeah. This is where you go and then set up when you want the robot to buy. Okay, when the price continues to dip. All right. So margin call drops, I give you for 2 calls. The first call, when it should buy the first call, or when it should make the first buy, and then when it should make the second buy. Right. When it should make is actually in terms of percentage. When the market price drops by this percentage, please robot buy 1, buy. Then the second buy, you only buy when the market price has dipped by 1.02. That is the instruction. You told it to buy 2 times, but when should it buy? This is where you now specify at what percentage the robot is supposed to buy when the market price drops. All right. So let's go and check it out. So here, this is where you come and set it up. Here, to now go and specify, if here I talked about 2 times, that the robot should buy 2 times. All right. I am now supposed to give the robot directives on when it should actually buy those two, call margins. Yeah. So I am supposed to come here, this part here, margin configuration, to go and configure my settings or to set my, parameters the way it is in the signal. Now, the margin call drop refers to the percentage dip, right? The percentage dip for the different positions being executed by the robot, right? And then multiple buy-in ratio refers to how many times you would wish the robot to buy whenever the market price dips by that specific percentage you've set. All right. So like, for example, here in the signal, we wanted the robot to make the first call or to execute the first buy order when the market price drops by 0.32. So I'll come here and change it 0.32. Now, how many times should the robot buy? Now, this depends on your first buying amount. Here, my first buying amount is 50, right? This is 50. So it means when the robot is buying, once the market, assume the robot already bought here with the 50, I started my robot and the robot has already injected $50 in the market, right? Now, and instead of the market price rising to my intended take profit, this time it dips, and it dips by 0.3. Now the robot is supposed to buy. But before it buys, it has to come and look at what the instruction is, okay? Which instruction it has been given. Now here, according to the instruction, you told it that when the market price drops by 0.31, I want you to make the first buy. And for you to make the first buy, that means the robot is going to pick the $50, comes here, it's just like picking it and holding it in your hand, and then you now follow instructions step by step. I have picked the $50. The first thing is, yes, the market price has dropped by 0.3. What do? Pick the $50. I have the $50. What should I do next? Come and check on my multiple buying ratio. What is it saying? That whenever the market price drops by this, what should I do? How many times should I buy? Now here in the settings, it is talking about 2, meaning the robot is going to say, okay, I should buy 2 times. So you will multiply this by 50. So in total, what are the amount the robot is going to use when it is buying the first call is going to be $100. All right, it will use $100. Now from this point here, in case the market price fails still to rise, but rather continue to dip, there's another instruction you're giving the robot. You told the robot to make the second call or to buy the second time. But when should it buy the second time? You should buy the second time when the market price dips from this point. It dips further by 1.02. So when the market price dips further by 1.02 from when it made this buy, all right, you want the robot to buy again. Now the robot is going to pick the $50 and then comes and check what the multiple buying ratio is saying. The instruction is also saying 2 times. So it will again multiply this by 50. So again, the robot is going to use a total of $100 when it is executing the buy order for the second call, right? So in total already, you will be having 200 plus the other initial entry when you just started your robot. The robot picked 50, I believe you remember. So you'll have a total of 250 already in the market. You see that? You see that? You already have a total of 250 in the market. That is with respect to our first buying amount, which we have here in this setting. You have 250 already in the market. And that is done. Now, at this point, what I said last time was that you hold on and wait and see what is going to happen after the robot buys off these 2 calls. You're going to wait and see what is going to happen next, right? Now, whenever nothing happens again, you're going to open 3 more margin calls. 3 more margin calls, right? 3 more margin calls. You're going to open the third call, fourth call, and fifth call, right? Then you're going to give them specification when the robot should buy the third call, when it should buy the third call, the fourth call, and when it should buy the fifth call, and how many times, right? How many times it should buy when it is buying the third call, how many times it should use, how many times should you buy when it is buying the fourth call and the fifth call, right? And here, what I recommended, that when the robot buys off the first two, and then you still see the market prices dipping, open the next three. But as you open the next three, give it a drop of 7%. Give it a drop of 7%. Give it a consideration of another drop in the market price by 7%. So balance between the three margin calls this percentage of 7%. All right. And then try as much as possible to allow the robot to use small amount here. Why? Because you're managing. Try as much as possible that the robot uses small amount for the third call and fourth call, because you're preparing for fifth call and other calls that will follow. Let the robot use small amount for the third call. Let it use small amount for the fourth call as they prepare for the sub cells, for the sub positions. Because why should you prepare for the sub position, like from the fifth call onwards? Because whenever the robot is, whatever amount that the robot is going to use for these positions from the fifth call onwards, each of them will be treated independently. Meaning, whatever amount the robot uses from the fifth call when it is buying, once the market price rises, it is going to sell independently of that amount used. All right. The fifth call onwards are what we call sub positions. They are the sub bin. We call them sub bin. They are treated as independent units. Independent at that whenever the robot buys the fifth call, whatever amount the robot used when it was buying the fifth call, it is going to sell it as fifth call alone. And the beauty about this is that you can even set the take profit for the fifth call alone, independent, okay, from the other ones. You can set it alone. Same applies to the sixth call. You can set also its take profit independent, the way you wish. And also, whenever the robot buys, as it is selling off, it will also sell off the sixth position as independent as it is. It will sell it alone from the fifth call, from the seventh call, from any other call. It will treat it as a single, as an independent unit. All right. I hope that makes sense. Let me check it out. Does it make sense? We are still on how to properly allocate your wallet to properly manage your wallet as you embark on the trading journey. The best way, sometimes people tend to violate, but this would be the best time. And if you can do that, trust me, floating loss will be news to you. If at all you will go through a floating loss, it will be as a result of either some serious dump resulting from a news that probably happened and causes the same to happen to Bitcoin. But if not, if you follow this, trust me, floating loss will be news. Okay, it will really be news. So are we trying to follow? If you're following, let me say thumbs up on the chart. Let me see, would you be kind enough to give us a thumbs up, to give a thumbs up, and as we continue. Yeah, thank you very much. Thank you very much. Yeah, if you don't participate, you don't come back. You don't come back tomorrow. Giving a thumbs up will not cost anything. I'm seeing them. No problem. Before I proceed, let me get this question first before we proceed. Yes, Kingston, please. You have a question in that area. If you have any question with regards to that area which I've just handled, please. This is 5 minutes for you to ask them, and I see I can answer them. Okay, Kingston. All right. Sorry about that. Is my audio okay? Kingston, I have told you to unmute yourself. You can unmute yourself. It's okay. Yes, unmute yourself. Unmute. Unmute. Just tap on the, this mic. This wants to speak, please. You raise up your hand, then I ask you to unmute, and then you do that. Just tap on this part, and you would have unmuted yourself. So please do that. Kingston. Hey, Kingston. Unmute, please. Okay. Let me get another person. If Kingston is finding it hard to unmute. Any questions so far with regards to that part, which I've just talked about? Trust Kingston is not there now. Okay, I believe, let me trust that it is okay for everyone. Yeah, is it okay for everyone? Yeah? Sir?
Yes, coach, it's understood.
Okay, that's okay. All right. So hey, let me make some few people co-hosts so that in case I'm kicked out because of some calls, the meeting does not just end. No, not to change hosts, but to make co-hosts. Okay. Okay. That will be enough. I'll make this one also. Just to okay. All right. So we are good. Let me just let's come back. Let's come back here. So I hope you understood this. Please, this is our strategy. This is the strategy we shall be using. Okay. This is the strategy you shall be using. So now this is what I want to advise. When the robot, this is what I want to advise. This is, and if you follow this, you'll enjoy. You see this multiple bind ratio? This two multiple bind ratio? When you want your robot, if you want to enjoy this very well, what you're going to do is this. Make sure this amount is half, whatever amount the robot is going to use here is half of your first buy-in amount. Is half of your first buy-in amount. I give a simple example. If my first buying amount there is talking about $50, what I'm going to do is I would want the robot to use $25 for this position because that is a half of the $50, which is my first buying amount. So which figure am I going to put here so that once the robot picks my $50 and it comes and check on this instruction, it is going to buy, it is going to multiply whatever figure I've put here so that I can only have 25, which is a half of it used in that position. So it is simple to get what percentage that is. You're going to divide first buy-in amount. All right, sorry. You're going to divide 25. The amount which you want the robot to use for that position by the first buy-in amount. All right. So in this case, we want our robot to use 25 only, which is a half of our. That's so we're going to put 25 divided by 50. We're going to get 25. I mean, so we're going to get what? The 0.5. So you want the robot to buy 0.5 times. So you're going to put here 0.5 times. So the robot is going to pick $50, comes and checks here and multiply 50 by 0.5 times, which will be $25. Done. Is that okay? Is that okay?
Yeah.
I hope that is okay. That's okay for everyone. Okay. Now,
yes,
then,
coach, yes.
Yes. Then, for the second, for the amount that the robot is going to use here, my recommendation is let it be the same amount as the first buy-in amount. Reason being, you want an amount that will have a significant effect on any floating loss that may want to come, right? You may want a significant figure. Because in total, if you have $25 here, plus the initial buying amount or the first buying amount, you'll have 75 already, right? $75. Now, $75, if two things normally, I recommend two things. Either you put this, the amount going to be used here to be the same amount as the first buying amount, or let it be a summation of the first buying amount and this. Does it make sense? At least it needs to be either an amount equivalent to total, to an amount closer to the total of the two. I mean, an amount closer to the first buying, to the total of the two, or exactly the total amount. What I mean is this: if here was 25 and your first buying amount is $50, this is a total of 75. Now, what the robot should use for this portion should either be this amount, or it should be a summation of the two, which is 75, because that will be a 50-50. Now, it means that if by this point here, the floating loss was, let's say, was now at -2, by the robot using 75 or an amount equivalent to the summation of the two, this floating loss is going to be halved. So it will come to -1%. Yeah, that floating loss, yeah, if it was -2, just multiply by half of it, it will be 1% negative. So it will have an effect, significant effect on the floating loss, because it is the same amount. You get that? Same amount. But you don't want to get still, this percentage may increase even after the robot buy. It may still increase, yeah? May again go to maybe -1.5 or even -2 again. So that's why you're only making sure that you first of all see what will happen here before you can open the next 3, 4, and 5 margin calls. You just want to see what effect will happen when the robot buys off these two positions. Will the floating loss increase? That's where when you're now preparing for the other to open up the other 3, which will cater for a -7% drop in the price. From here, you're now looking at -7% drop. So you're going to balance with the 7% within the 3, 4, 5 margin calls. Yeah? Or I hope it is clear. I hope it is really clear. You balance within that. So now what is going to happen? Yeah, so here it means literally we would put here, sorry about that, we'll put here 0.5, and then here would be, if you want, we can put here which amount should we put an amount equivalent to that, or a summation?
Summation.
We should use a summation, right? So let's check it out. So we want to find out which figure can we put here so that we have a summation of the two, of the 50, which is our first buying amount, and the 25 that will be used here.
1.3.
So it will be 1.5. Perfect. Yeah. So you have 1.5. I hope we know how we arrive at the 1.5.
Yeah, 50 and a half of the 50. 1% plus 0.5.
I hope that is okay. Because at the end of it all, we're going to have we shall have now, the robot is going to pick our $50, multiply by 1.5 to give us 75. So which is the summation of this and the other 50, which is the initial entry, and then this other amount. So it means now after the robot when the robot buys off these two and the floating loss, is going to, maybe say it goes to, okay, let's say it goes to -1. Now, when the robot buys off this, because we're assuming the floating loss is, let's say, at -1 or point something. If the robot buys off this position using this amount, what effect is going to happen here? What will happen? It will be halved, right?
Yeah.
So it will be in 0.5 negative, around there. So you see that there's a significant of the robot buying here, and the market price reversing quickly in your favor, and then boom, you're out.
Yeah.
You get that?
It's a big profit.
Yeah. So that is the secret about the two margin calls I always give in the signal, if you had not known. Okay.
Thank you.
Yes. Somebody's asking a question? All right. Now, if that is done, you only now will open more margin call. If you see that the effect, this floating loss, that the effect of this buy, which had initially caused the floating loss to reduce by half, is again, the floating loss is again increasing at a serious rate that you feel may really not.
Coach, please, please.
Yes.
Sorry for interrupting. Please, I want to get something from it. Whenever
Yes.
you give a two margin call drop,
this is the settings.
Yes, if the first buying amount is $50.
Yes.
So are you saying now the first position should be doubled?
I don't understand. Pardon again.
Okay, for example, I purchased a particular coin for 50 USDT, and the first call, should I buy two times or once?
No. Buy half of what your first buying amount is.
All right. That's what I want to understand.
Then the second call, let the robot buy a summation of the first buying amount and the first call.
Okay.
Yeah.
I understand. Thank you.
Yeah. Why? Because when I talk about current price signal, that means I've dropped a signal which either I'm seeing the market price has the potential of having a reversal, or it has already reversed and it is on a rise. That's what current price signal are about. So I don't need to set a preset, because with a preset, you're actually setting a trap on a market price that is going down. So you are setting a price, a trap somewhere there, that hoping that the market price will dip up to that point, up to that price, then the robot will now buy before it reverses. But current price, I'm dealing with a coin whose market price is on the verge of having a reversal to the upside, or it has already reversed and it is on a rise. Okay. Yeah, so that's why the dip may be there, but not so much. And I always hope that this percentage is sufficient. Yeah, if the robot can buy, use some fund here, so that at least it gives you something reasonable as well. You get that? So it may fluctuate around here, around 1 to 1.5 or 1.3%. When it is fluctuating, you may try to dip a little. Yeah. So that's why this is very important. Now, the other thing is, now after the robot buying off these two positions, now the next thing, you're going to open third call, fourth call, and fifth call, right? Now let's open it up. I'm going to increase it. Now we're going to increase it to 5. All right. Then you come back to the margin configuration. You come and set your margin call drops and multiple buying ratio. Now, still taking our first buying amount as $50. I said, once the robot buys off this, now here, you're going to distribute 7% for the 3. Yeah? Distribute 7% for the 3. It doesn't matter which one will start. Let's first, this divide by 3. This should be around 2 point something, right? 2 point? 2 point?
2.33.
Yeah, 2.33. So I would regard it that you can decide to just say, okay, we're going to say this is going to be 2.5. Yeah. Or you can just say, let this one be 0.02. Then let this one be 2.52.
Yeah.
And this one also 2.5, right? Yeah. You see that? Hey, now that is what you're looking at. You're distributing. Now you're saying that, okay, I'm now ready. I think this market wants to now be stubborn. Let me now cater for extra, because sometimes you may get offline and you may get busy. Yeah. So, but you want to see, you give it that space of -7. You want the robot to be buying. Now, in this 3, the first 2, 3 and 4, make sure the robot now uses a small amount here. As you reserve more fund for these other down ones. 5th call onwards. You get that? So here you can decide, allow the robot to use $10, $10, or $15, $15. Because remember here, you already have 75 plus 75. That's how much? $150 already in the market. You get that? You have 150 in the market. So allow the robot to use little for the 3rd call and 4th call, because you're now preparing for sub position where you can now manipulate your robot and maximize profit in the sub positions, maximize sub sales like that, as you wait for the market price to reverse, because the market price now that goes deep by -7. That means that market is either now on a serious retracement or it is already on a downtrend. So you also need to prepare for it. You need to continue enjoying along the way, whether it is retracing or whether it is going on a downtrend. You have to enjoy, because as we all know, the market price does not drop linearly. There's an aspect of a drop, then a retracement to the upside, then another drop and a retracement to the upside. So you want to take advantage of the robot buying here when the market price rises a little, either by 1.5 or 1.3, you want the robot to sell. So if it dips again, you want the robot to buy. When it rises a little by 1.30, you want the robot to sell. So that is what we call sub-sales. You get that? Yeah, you're preparing for the sub-sale because this one still would be intact. This first 4 will be intact, but anything from 5th call downward, you'll be enjoying some of these sales. They're called sub-sales. Sub-sales is arising from sub-positions. They are called sub-position. The robot will be buying them and selling them independently, right? Depending on the TP you've set for that particular position. All right. Yeah, so that is that. So now here, make sure the robot uses little amount. Now here, you can decide to say, let it use 10. 10 divided by 50, that is, what is that? 10 divided by 50, that's up, 0 point?
0 point.
0 point?
0.2.
0.2. Let the robot also 0.2. Here, a total of 20. Adding up on the other one, that's already around 107. So yeah, 70. Now, for this supposition is where you can put a little bit of some money, maybe $50, yeah, or $100, depending on how much you have, right? Because why? Here, the robot is going to buy this position and treat it as a single, as an independent unit. Whatever amount the robot is going to use here, if our first buying amount is $50, and let's say, for example, you put here two times, the robot is going to multiply the $50 by the 2 to give a total of $100. Now, remember, you're going to set the TP, the take profit, for this sub position alone also. For example, you can decide to set 1.5%. So meaning, if the market price, if the robot buys off this position, and then the market price reverses and begins going up, and then this rise is by 1.5%, right? The robot is going to give you 1.5% of your $100 as profit. So it will sell it there and then independently. You get that? If you had set the TP to be 2%, the robot is going to give you 2% of your $100, which is used for that position, or which is used in that position. You get that? Hey, that's the secret. That is it. So you set this to reserve more, to pump in here. Yes.
Hello, coach.
Yes, please.
Sometimes some of the coins are stubborn. They may even buy call, 5th call, 7th call. So, for example, that in a fifth call, I decided to double the first amount, and we went on and moved on to 6th and 7th position. So, what will be the outcome of it? If for example, let me say, for example, I have only 100 USDT to invest on that fifth call. At the end of the day, they buy that fifth call and it's still dropping. So what will I do at that particular time?
Now, in that particular time, that means you relax and wait. You wait.
Okay, because I have a
You
coin
wait.
that I'm AI. I've been in this coin for a couple of weeks now. Although it has been giving me money, sometimes $10, still in floating loss, but it has been selling. Sometimes it buy 8 position, it will sell 8, 6, 7, 6, 5. Then it buy again. That is continue. But I've been making money on it. I've been making money on it on daily basis.
Yeah, that's the beauty of the subcell. If you allow, you set your robot to, to the position where, because the most important thing is this is what I'm telling you. If you see that the robot has bought off these first two and you really see the market price is dropping, rapidly, let the robot buy off these two. You let it use a small amount. You prepare for the sub cells. Reserve a little capital for the sub cell. Remember here, you've not even touched on the reserve. This is still part of what you intend to expose in the market, yeah? The 50%. So you're planning within the 50%. If it is done, that's when now you begin going to you begin going for the reserve. You get that? So here, what happens here, if the robot, for example, uses $100, you know what will happen here. So after setting the call drop and then the number of times, which will determine how much the robot is going to invest or inject when it is buying off this position, you now quickly come back here and set the take profit here. See here? Distributed and take profit allocation. This is where you're going to come and set how much TP you would want the robot to sell for the fifth position of the amount it has used.
I normally give it 2%. I always deliver.
Yeah, you can put it 2%. There's no problem. So once the robot buys off the fifth position and the market price bounces back in your favor and the market price rises by 2%, expect 2% take profit of whatever amount you had instructed the robot to use for the fifth position. If it has, you instructed it to only use 50, 2% of 50. If you instructed it to use a total of 100, that will be $2. If you said 1,000, that will be $20. Still as a sub-cell, it has not touched the other part, the other first four. This is just the fifth position only. You get that? Yeah. So, now, but as you set this, okay, whenever the robot buys off the first two position, and then now you intend to increase your margin call limit to up to 5, right? You want to increase from now 2, you now want to add more 3. The most important thing you need to, after setting these parameters, come quickly, okay? Come here, change the strategy mode. In fact, you could as well, first of all, once you come to trade settings and increase your margin call limit to 5, before you even go and do any settings on the call drop and then the multiple buying ratio, okay? The moment you increase this to 5, you come back here on this first page and change your strategy mode to a strategy mode that will allow for the to allow you to enjoy the sub cells, yeah? And there are, so you come and tap on this strategy mode, and then you change your strategy mode. From this point, you bring it to this lower one, sub-bin mode, real-time settlement. The other time we talked about what these three means and what the application are. We said sub-bin mode real-time settlements here. Whenever the robot sells, it settles you there and then in real time, right? For example, if for the fifth position, I'm assuming it is already within the sub-bin mode, right? It is within the sub-bin mode. Now, if the robot buys off the fifth position, right? Let's say to use the $100, and you wanted 2%. If the robot buys off this and the market price rises by 2%, the robot is going to give you 2% of your $100. Now, this profit here, which will be of $2, will be reflected in your revenue area or revenue details there and then. Meaning, in actual sense, whatever amount that was used, including the profit realized, will all be taken back to your sports wallet. It will go back to your balance. Okay? It will be shown, and the robot will register a record of what has happened. It will show you 2% realized from this sale. All right? That is the essence. So you want to see the profit reflected there and then. Whatever capital used and the profit realized will be taken back to the sports wallet. That is what this sub-bin mode real-time settlement means. So if you set your robot to this strategy mode, that is what it will do. But if you set it to this, if you change from here to this, it means it is going to behave like this, but it will never settle you in real time. Okay? Fifth call, it will buy. If it was to use $100 and you had set 2% take profit, whenever it buys using the $100 and then the market price rises by 2%, it is going to give you 2% of your $100 as profit. But do you know what is going to happen? First of all, the profit will not be reflected in the revenue details.
Yes.
Secondly, this profit will also not be, this profit of $2 plus the capital that was used for the position will also not go back to the sports wallet. It will be retained in the coin.
Yes.
Right? And the essence of retaining it in the coin will be to reduce floating loss. Okay? It will reduce floating loss. It will help you to reduce the floating loss. Why? Because whenever a robot buys, always the effect it causes is that by establishing the new average price, it reduces the floating loss. The floating loss reduces. Right? I'm assuming, for example, before the robot using the $100 for the fifth position, let's assume that the floating loss was negative, let's say -5. If by the robot buying using $100 for the fifth position, maybe let's say the floating loss then reduced to -3. Now, the effect of this amount injected on the coin is what resulted into the reduction in the floating loss. Now, if your strategy mode is on this, once the robot sells off, it means it has gotten rid of the $100. It has removed it from the coin and it has taken it back to your sports wallet. This percentage tends to go back to -5. It will go back. But if the strategy mode is on this, it means the percentage will be either maintained or it will even reduce further to -2, depending on how much the effect of the profit is. If the profit is much, the percentage will even reduce further. If it is little, it will have a little effect on the floating loss, but at least it will maintain the floating loss to a lower figure than it was before the buy. I hope it is clear. That's the use of the two. But the first one here, whenever you leave, if you leave your strategy mode on the wall warehouse mode, what the robot will be doing is, irrespective of which position the robot has bought, it will treat it as a single unit. Even if it buys 100 times, even if it buys 70 times, it will never sell any of those sub positions as independent. It will wait, it will gather everything, it will just wait to sell everything at once. So meaning if you float, if you go to a -10%, there's nothing you can do much here apart from manual replenishment. You can, you either wait or you just pump in an amount which you know will have a significant effect on the floating loss, or you just wait because you're not going to enjoy any sub sell, even if the robot has bought 10 times or 20 times. For as long as it is on the wall warehouse mode, it will never take care of any sub position. You get that? But if it is in this other real-time settlement, imagine from 5th call all the way to 20th call, each of them will be sold independently. You know how much money that will be? Hey, you'll be gathering those small dollars. 20th call, 19th call, 18th call, 17th call, all the way to the 5th call before it can now wrap up everything as a single unit. You get that? So that is it. So quickly come and change this. Right? You change it to sub-bin mode, real-time settlement. Right? So let's do this, change it here, and then sure. Then you go back to your trade settings. You can now go and you can now start, you can do this before or after, as long as you have increased it. Just make sure that by the time the robot is reaching the 5th call, your strategy mode should have already been changed to submit mode real-time settlement. You can just go and do the settings on the margin call drop and the multiple bind ratio. Then you come back and finally now change the strategy mode to real-time settlement. Okay. Or because sometimes if you don't do that quickly, the robot, by the time you come back here, you find the robot has bought off the 3rd call, has bought off the 4th call. That is if the market is very volatile and it is going down deep rapidly. By the time you know it, before you know it, it has even bought the 5th call before you changing. Now, once it has not happened like that, you forget. Now relax. So that's why sometimes it is very important as you're doing that. First of all, switch off your margin call. Let it be off like this, okay? So that the robot cannot buy in the midst of you setting. Because if you don't do that, by the time you come back to change here, the robot would have bought the 3rd, 4th, 5th. If the market price is dropping rapidly, you'll find when it has already bought this, and once it has already bought the first 4 and it has gone to the 5th, you can now not change the strategy mode. You know, if you had not changed, you can now not change it. Okay, so the best way is first switch off your margin call if it was open like this. Okay, if it was open, just quickly come, tap on it, and then switch it off. Let it be like that. Let it be inactive, so that you can now only open when you're sure that you're already done the settings the way you wanted to do it. That everything is okay. The 3rd call is to the required margin call drop. 4th call the same, and 5th, and it is of the same multiple bind ratio which you intended or you wanted to use. So if it is okay and you're sure, you go by that, then you save, and then you now come and open your margin call. Then the robot now will begin taking action to buy off 3rd, 4th, and 5th position. Is that part okay?
Yes,
is it okay?
Coach, yes. Yes.
The last part, the last bit. If the robot buys off all the first 5, and the market is still showing some craziness of continuous dip, this is where now I said you have to again cater for extra 10% dip. You don't open 10 margin calls. You will all open 10 margin calls if you want to use, if you want it that way. But what I always said and what I'm going to repeat, you open margin calls that will cater for a 10% drop. So meaning you can even decide to add just 2 margin calls, maybe the 6th and the 7th. Then you divide the 10% between the two. Here you put negative, you put 5%, here 5%. That is still okay. This is 10% dip. Or you can decide to just increase this to, you can open 3 more, 6, 7, and 8. Distribute the 10% between the 3. It is still okay. What is most important is cater for another extra 10% dip. Yeah.
Coach,
And as you know, yes.
I don't know if you can hear me now. Coach, I
can.
wanted to find out. The last you saying you cater for 10% for an extra drop of 10%. Do we put it like in increments, like let's say 2, 3, and 5, or it's going to be like maybe 3, 3, 4, or how is it factored?
The order does not matter. Though I recommend an ascending order.
Okay.
Eh?
All right.
If the 6th is small, let the 7th be higher than the 6th, like
Okay.
that. But the order doesn't matter.
All right. So that to use
because
another
because
the other one I couldn't speak. Yeah. Okay.
Because you may cater for, you may decide to, yes, just to cover you up, just in case. But sometimes it doesn't really dip by 10%. Yeah, it may just dip by either extra 2 or 3 or 4, and then it reverses. But you just want to, you want to be covered. You get that? You don't want to be in pressure.
Yeah. Okay. Thank you.
Any questions again from some other person?
The question I wanted to ask that time I forgot, but if I remember, I'll ask again.
Okay. Is that okay for everyone?
Coach.
Yes, please.
Good evening, everyone.
Good evening.
My question, I have actually, it's a question. which guidance on the other, not on this last session, but on the second one.
Yeah.
The margin calls. My question is, when we were at the margin calls and the call drops, my question is, can we get a simplest way of not going into those calculations? When you get 50% divided by 2 weeks, 25 divided by this one. Because
Ivan,
I'm assuming I'm giving a coin to someone who cannot do those calculations.
Yeah.
For me, I can do it, but what if someone who cannot do those calculations? That person.
But there's no way someone cannot do a calculation. There's no way. This coin here, Pam. Yeah. I hope those guys, those who entered, this coin delivered. Those who entered it, they delivered, right?
Yeah, long time ago.
We were busy, but we delivered our 2%. That's the most important. Okay. So now there's no way, Ivan, you can run away from calculation. I mean, we believe all of us are adults, and if you know how to count money, that means you know how to calculate. Because it's a simple calculation, it's not very complicated, The most important thing is it is you who determines how much it is you going to determine, all right? Let me just go back on this. It is you going to determine how much of the USDT you would wish the robot to use for that specific position. Okay? It's a simple thing because it's just a matter of considering your first buying amount. You check on what your first buying amount is. Like in this case, is 50. Then you come and say, okay, how much do I want the robot to use when it is buying my second call? Then you say, I want it to use maybe $20. It's simple. You quickly come and say, okay, what is my first buying amount? $50. Divide by the amount I want the robot to use, $20. Sorry. So you put $20, which is the amount you want the robot to use, divide by your first buying amount. Whatever figure you're going to get here, right? This is the amount to be used over the first buy-in amount. So whatever digit you're going to get here is what you're going to set as the number of times you would wish the robot to buy. You get that? It's a simple thing. Amount you want the robot to use by the first buying amount to get the figure, which you're going to put here as your multiple buying ratio. Isn't that simple? Like if you divide this, what's that? That should be around. That should be 2 point something, 2.1, 2.2, something like that. The figure you're going to get is what you're going to put here, because at the end of it all, you want the robot to pick, once it has picked your first buying amount, which is $50, and it multiplies by that figure, you want a total of $20 to be used for this position. It's simple. So I don't think it is complicated. Is it complicated? Guys, is it complicated? I don't think, yeah? It's simple. You cannot run away. Well, as long as you can count money, you can calculate. Even if it means by using fingers, you add up those fingers. It means picking up. Okay. Okay. So all right. So anything else? I hope.
Coach, on that part where the gentleman was asking now, unfortunately, I wasn't on the last meeting. And if you see that, I send you a message asking for me to watch it. How would yes, that page that you just put on the screen now with the graphs. How do you determine which coin is ready to trade?
Yeah. We shall reach there.
We haven't reached there yet.
No. Let's do
I'm trying to
it.
swallow before I chew. It's okay. Let me start chewing. It's okay.
That's
It's
the
all right.
class.
That's when we
Okay.
have it in the technical classes. And
Okay.
and I think you're there. Aren't you in the group? In that technical class.
Yeah,
I think
I
you're
am
there.
in the group.
But just
the
that
thing
for you,
is,
you are busy.
yeah, you'll be at work and all that, and yeah. So that's how I'll be asking to see the video so I can watch them.
I'll share the video.
Okay. All right, thank you.
Though for the technical class, I really don't like recording. I want it to be there. Yeah, I don't like
Because
recording.
that's where I love to
Ever since
also
that
show my
is
colors.
even if you go to my YouTube channel, you don't get a technical whatever recording. Technical analysis
I was on a
recording.
YouTube channel yesterday and I didn't see it.
It is not there. It is not. So I don't like recording it. But not that I just don't want to, but yeah. I always prefer somebody being there. If you've taken up the initiative of, being part of the class, you have to be there. But I won't speak to myself,
All right.
So
okay.
Mm.
So when do you expect this one to be?
It will be tomorrow. We always have it on what? We have it on Saturday. We have it on Thursday.
Okay.
And Tuesday.
All right. Could I also have the invitation sent?
Let him in the group, coach.
It is in the group. That one we shall deal in the group.
Which group is this, coach?
Well, I added you there unless you're not there. But
I don't know which group because I read everything that you sent.
Then don't worry. I'll reach out to you.
Okay. Thank you very much.
Okay.
Okay.
Bitcoin dumped to I don't know what happened.
Yeah, Coinbase. It's because of
Market.
Coinbase.
What happened to Coinbase?
I don't know. They just dumped BTC. They crashed it. I don't know what they did. They crashed it.
So bad. Let me see.
I'll check on Watcher group.
Yeah. That's a serious one. What happened?
It was a big dip up to around 58K.
But it is going to bounce back.
Yeah, it will bounce back.
The market is going to stabilize quickly.
I'm sure it's because of the ETFs.
The whales have.
Yeah, the whales. They're doing
something. They were timing this. It was 60 what? 60? It went up to 60.
64.
What? 64, just 5% away from the previous all-time high.
That's crazy.
This is crazy. Crazy. Yeah. Bitcoin. Hey.
Wait for it.
This was the previous all-time high. Oh my. This was the previous all-time high. I drew my line there. Just away. Honestly, 100K plus. That's what I'm seeing now. It's now seeing it is clear. It's a possibility.
For sure.
I'm now seeing. Yeah. This is crazy money. Aye. Let me check on weekly. Check on monthly time frame first.
I hope and pray that you will also be involved in those 100K monies you're talking about. Also want to be there.
On what?
On this the Coinbase you're talking about. Also want to eat the piece of the pie.
Oh, that's just news.
That was the news. Some news.
News that affected the Bitcoin price.
But
when it's rising.
But those who want to, but it is going to, but it is still okay. I trust it is going to still touch the 69 before it retraces.
Exactly, before we see a correction.
It's a good correction. It's a good one. I see it touching there before it,
I'm seeing a correction in March, either way. There could be a correction.
But unless
No.
otherwise. But I see it surpassing the 69. But
Yeah.
if that build-up is sufficient, this resistance may not stop it
Anyway,
the way I see. It's a weak one.
March is
I don't.
normally sometimes a bad month for BTC.
But do you know what? It may not happen so much. Why? Do you know why? Because of the halving. That is from April. So people will tend to hold, at least this is different here. People will tend
And
to
the
hold
FOMO
more
also.
to
And
their
the FOMO.
BTC. So they're going to hold more their BTC than sell them.
Yeah.
You get that
Plus
as they
the
prepare
FOMO
for that,
also.
for the halving. So it's most likely not so much to be affected. I trust. It may not be so much affected because now when you see this is a strong bullish candle, it's really a strong one. And being a strong one like this, there's a potential for the three, they call them the three, three men, three consecutive views, like these candles here. Hey, if another candle can build up here, then comes around there, and then the third one before it retraces. Man, okay, let's see what happens. But it is still going to build up. It is still going to touch 69. That's what I know. It will touch 69. It will, because this gap is still going to be filled up. There's some liquidity that has to be collected. Some people are going to collect off this liquidity, this money, which is hanging around in this place. Unless maybe, unless a failure swing happens, which is not a possibility I'm seeing here. Possibly, it may not happen. Failure swing. 1 week. 1 day. Okay. Yeah, but it affected it. The way coins went down. Every place is just so much red. Not a good one. Anyway, it's fine. I think I hope for today we can end there. If there's no question, we can end there. But maybe just a little clarity on the settings. When you're increasing the margin call, when you're setting up to cater for further 10%, here you can just keep on interchanging. Here you just determine an amount. You can determine the amount to use, the amount you want the robot to use. Let's assume I increase this to extra 5. I'll add more 5 to make 10. So I'll make it 10. That means I will increase this extra 5. So the extra 5, this one I'll just distribute 2.02. I'll give it 2.02 throughout. Okay. Now here, most of the times here, in most cases, this is where now the aspect of the reserve capital comes in. This is where it comes in play. Most of the times when you're catering for the extra negative 10% dip, this is where now sometimes you tend to enter into the reserve. So here you can just allocate the reserve, just allocate the reserve here. You can decide to, if you have, like, for example, $500, you can allocate. You can allocate a specific amount here. You can say, for example, you can interchange. You can say, if you want the robot to use $100 here, let it use $50 there. Let it use another 100 Let it use 50. You can just interchange, keep on interchanging them, so that you shouldn't also get excited and put everything. You never know. So just allocate it. You keep on interchanging, varying the amount. If yeah, here was 50, let the next one be higher, then you again lower it, and then you make it higher, lower it, because okay, sorry about that. So if this is 100, put this on 50, 100, 50, 100, right? So the significance of this is this lower figure, whenever you put a higher figure here, this higher figure helps in, because remember we said this would be independent position, right? By putting this figure higher than this, there's a tendency that it will have more effect on the floating loss that will exist between these two positions. All right, so you will not get surprised to find that the robot will sell off this one and this one at almost at the same time. It will clear off this and clear this one at the same time, you know, like quicker. Yeah? The gap wouldn't be so big. Eh? Yeah, so if you put, you should interchange them like that. If you put a smaller figure like 50, let the other one be higher than the previous one. Then if this one is small, let this one be higher than the other one, so that the effect of this buy, right, will cause some effect on the gap that is existing between the two. Because, for example, if this gap here was a -2, the robot bought it when the market price dropped by 2, putting an amount more by that significantly reduces the floating loss to even about 0 point something, 0.5 or 0.7 something, you know. But if it is the same amount, expect this percentage to be halved. That will be around -1. That will be the gap between the two. But if it is a higher figure, you know, see what the effect will be, 0 point something. So the gap will be narrowed, yeah? So keep on interchanging this. Now, there's no specific method for this, but just make sure you keep on interchanging. Just distribute the reserve from the 6 call downwards. The other part you're going to add. The dip you have taken into consideration, try to distribute, to allocate the fund to cover up those, you know, the 10. Yeah, so just interchange it. You can decide to keep it uniform. You can decide to vary them. It just depends on how you wish to take it. But at least the most important thing is you are taking into consideration of 10% dip. This is the most important part that you need to take very seriously. But this, you can vary them, because after all, each of them will be sold differently, and you'll see their sub-sell profits independently, each of them. Because after all, at the end of it all, you're also going to set that TP independently. Just like I showed you. After setting that, you just come here in the distributed and take profit allocation region and set the take profit. You know, the take profit for each of these, you see. In the default settings, it is 1.3, but you can vary them. You can put this one 2, 2.5 or 1.5, just depending on how you want it. Yeah, but at least each of them will be sold independently. The reference to the TP you've set. I hope that is clear for everyone. Yeah, in our next class, we're going to look at how you can set coins you're floating in whenever its signal has been given, because sometimes they can give a signal on a coin you're already floating in. But how do you trade it? How do you trade it? That's what we're going to look at. So that you enjoy the sub-sales with some other person who is trading the coin for the first time. If the coin was given 2% in the signal and you're floating, let's say -10, why don't you trade such a coin and also make 2% like any other person, other than looking on? So that's what we're going to look at next. Yeah, because it is very possible and it's a possibility. All right. Let me see. Is there anything on the message? Okay. You don't have to pause the thread, by the way, when you're changing parameters. No, you don't have to change. Yeah. Yeah. This one is saying thought wasn't possible. I don't understand what you mean. Yeah. Martha, I mean, who? Zach? I understand what you mean by that. Thought
Hey,
wasn't possible.
I'm just saying, trading a coin which is in a floating loss already.
It is very possible. Yeah, very, very possible. And you can make so much. If the
Yeah,
signal is
today,
saying trade,
today
take
I would have
2%.
gotten from it, but let me be around tomorrow. Seriously.
It is not tomorrow, it is on Friday.
Friday. Okay.
Yeah.
Then maybe what I wanted also to ask was, of course, you've given us a structure. I don't know whether this is what we should save and, like just select it, because that's what you told us at the beginning of the meeting, that it will just be a click away from setting a coin.
Yeah, I was supposed to set it. Okay. Do I do it? Let me record a video. I'll record a video and share.
Thank you.
On how to set it up, how to do that. But it's easy. It's easy. You just set it up and then it's just a click away. Yeah, just a click away. So I'll do it. I'll record a video. If I don't, then maybe that's what I'm going to start with on Friday, on how to set that. Okay.
I'm also not in the group. I don't know, but I don't know where to get you from. Can you type the number in the chat, maybe?
My number. You're not in the group.
Yeah, there's a group I'm in, but one group you shared for the tokens, I'm not in there.
Let me write it. This +2 5674 269948. That's it. That's the number on the chat. +25674 269948. That's it. Okay. I think there's no question. We can end here for today. And yeah, let's meet up on Friday. For those in the technical class,
yes,
class, we meet tomorrow.
All right. Will you please remember?
You better, you guys better be online, because now for me, if I send and there's no response, I see less response. Hey, we push it. So
how
you have
can
to
I maybe
be alert.
show you that I'm interested? Because I want to be there.
I thought I added you. I mean, I'll add you maybe.
I haven't seen it, to be honest. Plus, also, what happened is I've been off sick, so I've been under medication and all that. Yeah, but I'm still trying to be there.
You will be well as a man. You will be well.
Definitely. The mind is fine. It's just that I've got like a dislocated shoulder. That's all. Yeah.
All right. All right then. See you tomorrow for those in technical analysis class, and then for the mentorship group people, see you on Friday.
Okay.
I will share the recording so that you can at your free time go through.
Okay.
Good.
Good.
Yeah.
Thank you.
Good night.
Good night.
Good night, everyone.
Everyone.
Yeah.